Hello and welcome. I'm not sure about the concepts or about the topic of the video, but I will try to explain everything related to trading. Trading smooth moving averages and pivots and Fibonacci's. Okay, so on Friday, I got a sell signal. I published it on my X, and it was like this. It's here in my X. Uh, Here, as you can see, just got a clean sell on GPP, GPY, and then moving with updates. Here when it was 1.4. And here when it was on 2.3, and then the weekend comes, so it's the I hold over the weekend, and this morning I got my take profit. TP smashed on GPP GPY after the weekend hold, and yeah, here was the trading take profit 9K, and today you got another GPP GPY sell here. I gave everything on the entry, and here is running into the profits. I said, why not to record the small video, um, or a video about the strategy that I'm following to get those trades. Okay. Um, so let's talk about the 3-day position. So the 3-day position, if we go to the 1 hour time frame, we'll explain everything. Just be patient. Small this one. Okay. So the 3-day, whatever. It was a downtrend. Okay. And in this downtrend, the price is actually broke above the trend. Okay, the trend line here. So most of people will go buy. Why? Because they create here double bottom. We have here a double bottom and then the breakout of the trend line. So you have two signals to go long for this position over here. Okay, but we are not doing the same thing. Why? Because we know about many things, and one of them is the Fibonacci. When you go to 5 minute time frame, let's go to 5 minute time frame. Sorry. So when you measure the move here, still here with the Fibonacci, okay? This is not this one. This one. So when you measure the move till here, okay? So we have the price is over here, okay? And what is this in this line here? This line is a pivot, okay? So it hits the pivot above the 50% Fibonacci retracement, okay? And we have these four smooth moving averages. You can use them, you can not use them, that's depend on you, but I love to use them sometimes to give me just another confirmation. Okay, so we have the red, which is 120 smooth moving averages, and we have the 19 with the blue line here, the blue, and we have the green is for the 16 smooth moving average, and we have the 13 moving average. When it's like this, you see guys, red, blue, green, yellow, it's bearish. Okay, so here when I talk this I'm thinking about this. Okay, is it's red, blue, green, yellow. Okay, whatever. But people will want to go buy. Okay, they want to go buy. I'm not going to buy because why? Because the price or the market knows that there's a high percent that you go buy. So I'm not going to buy because the market knows I'm going to buy. So I'm going short. Why? Because this is my strategy. So now the first thing is the pivot. It hits the pivot. Okay. I'm doing actually a sell market here. Okay. So well, this is the pivot upset. Okay. It's about the 50% moving Fibonacci retracement, which give me another confirmation that the price is overbought. Okay. Uh-huh. And then I have the four smooth moving averages. Okay, and it comes here at the end of the Friday, and here I took my profit holding over the weekend. Okay, because I publish it here on X. Okay, so everything is here on X. It's time, everything is transparent, whatever. So yeah, so this is the strategy, guys. Okay, sorry. This is the strategy. Okay, what else? Let's see here. So let's say that we have a momentum to the downside with 1 hour, okay, time frame. Okay, you see the price create higher highs. Sorry, lower highs, and lower lows. So you have a momentum to the downside. Okay, so now the price did its move here. Okay, let's focus on this move here and what we gonna do. So if we are in this position right here, we're gonna wait. We need to be patient. Wait for what? Wait for the Fibonacci retracement. Okay, wait for the Fibonacci retracement. What the fuck is this? Sorry. Ah, where are you, man? Come here. Okay. So we need to wait for the retracement, for the Fibonacci retracement, and this especially this zone here. Some of people like the smart money concept or the ETC traders, they call it they wait to hit a order block over here. Okay, so right supply zone. Okay, so whatever. Fuck. Okay, but we wait here for the price to back to this area here above the Fibonacci. We're not going to sell over here or even over here because it's risky. Here it's a little bit risky, but here when you take some here, you are selling high. Why? Because the concept of trading is sell high and buy low. But what is this high that we are talking about? And what is the low that we're talking about? So people, they know that they should sell high and buy low. My people, some people, they will say like, here it's high. It's higher than this point here. Yeah, but it's not high enough. So how I'm going to know if it's high enough or not? So that's the question that people question every time, and people they don't know about it. How high is enough to sell and how low is enough to buy? To know this, you must play with Fibonacci's. Easy. Easy if you are the right, if you have the right mindset as well. So it's not easy like that, but we're gonna talk about this later. So when you are in this area, you must be search for something called pivots. And trust me, when the price did its move, it backed a pivot. You're gonna find here a pivot. Okay. Let's see if we can write something here. No. Okay. Yeah. Oh shit. Sorry. So here we have shit. Pivot. Okay. Pivot is you can at least from indicators, pivot traditional, easy. The force of smooth moving averages rebound. Okay. So when you have a pivot, you have what we say the momentum to the downside or to the upside. It's the same, it's similar. Okay, you have the pivot, you have the Fibonacci retracement. Okay, now the other confirmation that I'm personally looking for is the four smooth moving average. So I need to see this. The 120 smooth moving average, the 19, the 16, sorry, the 120, the 90, the 60, the 30, like this. At least if I'm not seeing the 30 doing some like this, it's okay if I have pivot. But at least if I'm seeing the for them like this, the 120, the 90, the 60, and the 30, that's another confirmation. So it's like we can say it's a mechanical strategy. And when you have a mechanical strategy, you make sure that your position is based on real factors, on real data from the markets, on real moves from the markets. You're not depending on your emotions. So that's what you must consider to be a mechanical trader, especially if you are a beginner. Trust me, if you try to be a discretionary trader, whatever, you're gonna be f up. You understand? So this is the strategy. Basically, it's easy to spot on the market. Here, as I told you, when I called for the sell on on Friday, it was the same thing, guys. The same thing, you know, the hour to 1 hour. It was a momentum. It was a momentum. You see here the momentum on the 1 hour time frame. Okay, so one time what? Okay, so we have here. This is the momentum that we are talking about. So the price did it moves, and what I wanted to see, guys, here. Hmm? What I want to see, I need to see the price go back over the what? The 50% Fibonacci retracement. Okay, and I need to see a pivot. Okay, I need to see a pivot on the 5 minutes. And here is the pivot. You see, this is the pivot. Pivots, whatever. Okay, so that's what I want to see. Okay, now the price did a move on the weekend. What is the move? It was on the weekend. It was this one. the gap. And most of the time I do the same thing. It's the gap here. I measure the gap with the Fibonacci. I'm selling over 50 and yeah, easy, isn't it? It's easy. It is the pivot. This is the pivot, guys. And 50% retracement and voila. Easy peasy lemon squeeze. You see another example over here. So this is a buy on the, it's a buy on the INQ, okay, on the INQ, which is Nasdaq. Okay, so that's it.